Hello, welcome to LCG's look ahead to the key events in markets for the week starting February 27th, 2017. So the 3 weeks of Rowena's starved pain is nearing an end. She will be back hosting the week ahead video next week. Just taking a look at how markets performed last week, it was generally another positive one for stocks. In fact, the Dow Jones, or Wall Street as we trade it on LCG, saw 10 consecutive record closes for the first time since 1987, incidentally the year of the famous October market crash. Last week I said if I were to choose the weakest spot in equities, it would probably be the European benchmarks. The call was a little bit early since the Germany 30 and France 40 registered gains early in the week, but ultimately proved valid as both indices closed the week lower. Election risk has been on the rise leading up to the Dutch and French elections, but taking a bearish view on stocks is risky when the uptrend has been so persistent. A market that has been reacting better to rising political risk has been gold. It's risen 9 of the last 10 weeks and broke above $12.50 per ounce last week to reach its highest since Donald Trump's election. We maintain our positive view on gold and see a good chance of a retest of $1,300 per ounce in the coming weeks. The main gusto behind the latest rally in stocks is the hope of tax cuts and government spending under President Trump. The Donald should give more details on his tax reform plan in the next couple of weeks, according to his press secretary, so it could even come as soon as next week. The emphasis on a protectionist measure like border taxes and prioritising the repeal of Obamacare, which Trump said at the end of last week, were not exactly game changers, but they were enough to disappoint overextended stock market bulls. Probably our biggest concern is that there is a good chance we are witnessing a buy the rumour before the sell the fact event in Trump's tax and spending plans. I actually think the Donald can deliver something worthwhile, but just perhaps not enough to satisfy markets that have rallied so far since November. On the economic data front next week, it's a little bit sparse as far as potential market movers. We'll be watching the latest revision for US Q4 GDP, US durable goods numbers, and the Bank of Canada rate decision. But there is an absolute deluge of corporate earnings, way too many to mention in fact, but some highlights in the UK are WPP, the London Stock Exchange, ITV, Persimmon, Morrisons, Next, Wetherspoons, Merlin Entertainment, Paddy Power Betfair, and Just Eat. From Germany, there's Adidas, Volkswagen and Lufthansa. And from the US, there's Oracle, Nike, Domino's Pizza, FedEx, and the last of the big retailers like Target, Sears and Staples. Also of interest will be the initial public offering of Snap, the company that runs the messaging app Snapchat, penciled in for March 1st. It will be the biggest social media IPO since Twitter, and LCG will be offering it to trade once it's live on the New York Stock Exchange. There will be a full write-up on the Snap IPO on the LCG News Analysis page next week. So that's it from LCG's Week Ahead. Thanks very much for watching and good luck trading.